Okay, recording is running. Can you guys see my screen? Victoria, thanks for asking. I'm good. Very good actually. Looking forward to Christmas. Tomorrow we have a meeting with a local friend because we started the first Christmas market, most likely here in this area. And it's going to be fun. Maybe it's even official. We even met the mayor here. And he said it's a great idea, but usually, or not usually, but it's a government, and yeah, how governments work, everybody knows how governments work, and they are fresh elected since a few months, since October, I guess, and they have to implement so many things. And yeah, they want to do something themselves, and we could be integrated, they said, but it's not quite sure if they really do it. um, and yeah, it's a government. Even though they are nice. How are you, by the way? So can you guys see my screen? Because it says I'm streaming, but I'm not seeing that I'm streaming, so better to double check. Well, no, it looks good. Okay. Good. So I've seen a lot of questions in the wish list, which is great. Hello, Mr. PA. Let's cover all of those first, and I think we're already kind of busy doing that for a while, and then I remember Victoria wanted to share some trades. We can do that as well. And so I'd say we start with the topic wish list. Okay, at this point you were talking about market psychology and how the monthly will be. No, we had that. This is from before here, 12th December. In the 21.8 Wiper group mentorship, you said that if a lot of things are opening in a demand area, a lot of longs opening in a demand area, you don't like the long idea anymore. Does this mean did you open order flow and see if there are spikes in funding open interest rising on low time frame at the zone? I like the idea that whales need to be sold into a key low. There's also an acquaintance of me told me that he's waiting for 2K ETH. He's not from a trading environment, monetary concepts. Does this make the level less likely to work? The kilo can get melted if retail is waiting for it or front run. Okay, so to address the first question, I use order flow as Confluence. So if I have a higher time frame idea and I really like the idea and I have like many confluences lining up, order flow is not going to define my entry or to hold my entry back. Let's frame it like, or hold me back to get my entry, to frame it like that. But it might adjust my size. So for example, I open order flow and we have a long level, and I see a lot of longs opening into this demand area, into my own long area. I take -1 confluence more or less from order flow, and this maybe goes into sizing. So I simply size a little less, and for example, if it's a most optimal level, I would say, let's say, size up to 2%. I get the negative signal of funding or of order flow in general. I might open on 1% and see how it develops. If it's showing strength, I can still add. I can also add on lower time from then, and I have like a whole range of possibilities what I can do. But if order flow is not flashing me or is not giving me green light, I rather size a little lower and maybe be on a little less size than I would have. And even though the level might work, there's nothing lost, right? So why not playing it a little more defensive in this case? And if I get a neutral sign, sometimes there is no clear sign from order flow at all. This is also important to note, because if you then look for confirmation bias or if you try to force anything into this analysis, it's also not good. Sometimes order flow does not provide anything of value, or at least not in a way that you would say, okay, this is a clear sign, and you simply ignore it in this case. And obviously if it aligns, so for example, we have a demand area, you have lots of best case. So the absolute best case in the demand area is lots of shorts opening, simply because these shorts are not just sell liquidity, so they sell into the level, right? which is the first step we want, but they are also going to be like forced liquidity should we go higher. So they are going to be the fuel for a higher for price moving higher. And in this case, this is the most optimal scenario we have, basically. If this is not the case, I might still want to have my entry. If I get the counter signal, I might want to reduce size. Simple as that. Then the 2K ETH question. It's very wise of you to look into other people's opinions. I did that a lot also in the beginning, and I still do that, to be honest. I also use the group for that, sometimes doing those polls and stuff. You also the most important part is that you don't get too biased because of that, because you still don't know. Maybe your friend's right. Maybe he's, even though he might not has any trading skills, but in this case he's simply right. So don't get too biased because of that. And it's also a very small sample to have only one friend who's like saying that. If you, for example, look at the general sentiment and you get the impression lots of people are very bearish. So let's take 72K, for example. The general sentiment was pretty fucked. Lots of people were waiting for this level in our bubble. News were still bullish, but if you think about it and see this whole thing here as the top range, obviously news gonna continue to be bullish because whales want to offload here, and why would they change the whole agenda too much if it's still working? So everything has to be taken with a grain of salt. But in general, I have seen so many people being so confident that this level is not it, we're going to go lower, blah blah. Then I looked at order flow, I saw negative funding, all of those things, and it was to me like, okay, this adds confluence. People were so eager to tell me that this is not going to work. I took this definitely in confluence, and we actually bottomed exactly around my birthday here. And another big confluence was that we had the reversed Titanic thing from Money Tower, and I simply looked at what happened like in the year before, and we had pretty much this top here, the second. So if you simply inverse this, you see we have the first top here, the second top in April. It's the 8th of April and 8th, 9th of April. And again here, we have the first top here in early March, and we have the second top here, the second bottom here, 8th, 9th of April. So it's pretty much completely inversed, right? So this was, first of all, it was the thesis of Money Tower. Then you had the sentiment. Then you had the front run of this key level, because the funny thing is we look for levels, right? But a front run of a key level also creates liquidity. And this whole move has shown this, because we don't need to take this level to create some kind of fuel or whatever. Fuel is people positioning themselves on the wrong side of the trade. They either sell into this or they even short into this, what they did here. And with every pump, they got squeezed out. They were the fuel for higher prices because they rate shorted into this, because they didn't buy or panic sold the bottom, whatever. And this obviously then creates liquidity. So coming back to and fuel. So taking this level does not change anything. If fuel is there, fuel is there. The block doesn't need to be taken. And also, if you look in the Euro chart, you will see we have taken this level or the level on the Euro chart. And you will always find a reason why this and that and blah. But in the end, you stack confluences. And if you have enough lining up, and in this case, we had so many signals flashing, so many majors hit their levels, the sentiment was like I explained. Obviously, I want to scale into positions. I'm not here to be perfect. I'm not here to building rocket ships, flying to the Mars or whatever. It doesn't need to be precise on every little screw. In general, I want to be positioned on the right side. And yeah, so don't be too over perfect and take those confluences as what they are. Then, for example, back to your friend, you said he has pretty much a very low, or don't want to put words in your mouth, um, not from a trading environment, a monetary concept. Okay, you do not imply that he's like he's not he's retail, but let's say in general his knowledge is not the best, and this is his opinion. Obviously, you want to counter trade him from an opinion perspective, so take this into account. And then you need to be aware of what is the expertise level of somebody. So if somebody is like a little more advanced in stuff like that, you want to give his opinion more or less credibility, obviously. But in this case, if you say he's not the best or he has not the best knowledge and he expects that, a front run or this level overshooting makes sense also because it's a round psychological key level number. And for many, this sounds like a key level because it's 2K, but in reality, it's simply a number, right? So it's pretty much it pretty much doesn't really matter. And I bet if we go for this level, we won't reverse exactly here around 2K. We will probably overshoot it a little bit simply because you will see big headlines, ETH losing 2K. It's too good. If the price is already this close, it's too good to let this chance slip to say ETH lost 2K because this is creating panic of people not looking at charts. So this is my expectation. But again, we are not building rocket ships here. So you might want to scale in even a little bit higher than this level in order to not get front run and scale into the level, and your invalidation would be this low, or if you want to play tighter, this FVG here, and that's it. And then you can add size, for example. Let's take order flow into account again. If you see big shorts opening, negative funding, people panic selling the lows, you might want to size up a little bit if you don't get this confluence not. If and also you can then simply wait for a trend shift to occur and then add size after this confirmation. So once the level hits, we have many opportunities, and I got a feeling it's gonna be not that far away or from a time perspective that we see those prices, especially if we cannot hold this area this low. We will probably go down early next year pretty quick into this area, and then we will see. And in general, I'm very interested in being a buyer there. So let me check the chat real quick. No questions so far. So I am gonna keep on bumping this. We have Rooney here. We did not talk about this. Thanks, Rooney, for the reminder. Key level mitigation and elimination from charts. Once a key level is hit, when do we eliminate it as a level of consideration, wicks or closes, once with multiple touches? Difficult question. In general, it's closes to me. In general, it's closes, yes. Then you take the time frame into account. So for example, if we talk about a weekly level, then you want to look for a weekly close. Obviously, if the daily starts closing below, that's not the strongest sign. If you have another day closing below and so on, obviously with every day closing below, the thing is, don't think of closes as something static, because if you think about it, a weekly close is nothing but a 1-minute candle closing on Saturday 12 p.m. This is a weekly candle close, and if they want to manipulate you, they push price around the weekend towards this area. Then nuke it maybe, let's say we have a long level, then nuke it on Sunday around 12 p.m. into the level or through the level. The weekly candle closes there, and then they push you back up. So what's the weekly candle really telling us? Okay, it told us that the 1-minute candle on Sunday 12 p.m. in the middle of the night closed below the level, basically, right? That's why we look at different time frames, and we are staying flexible with that. So the more time you spend below the level, and the more closes you get below the level, and this might be 1 day, 2 day, 3 day in a row, then maybe even one of those days is then also a weekly close, then obviously you have several confirmations that the level is broken. So stay flexible with that and look like, so for example, if it's a weekly level, don't bother about the 1 hour. So there may be 10 or 5 1-hour candles closing below. Don't care about that. But if there's daily candles closing below the level, you might want to get cautious. And then to see how many levels and how obviously the structure forms right after, how the sentiment is, are we bouncing back? Was it just like a manipulation move? And this is a difficult question to answer in general because every situation is so unique, and best is from like to evaluate every situation on its own. In this case, for example, we bounce from the level, and I don't really care about the level itself anymore. So I care more about the structure that has formed. So the first sign of weakness that occurred here. So let's remove this trend line to make it a little cleaner here. The first sign of weakness that occurred here was breaking this trend line. I don't draw them. This is not what I really do, to be honest. But in general, you can look at that. But trend lines in crypto can be a little bit tricky. Right now, we are losing this. What you want to do is to look at market structure, local market structure, and we took the supply here, we started grinding lower, we started making lower highs and low lows. We took out this demand here. Ignore this wick, for example, because it will like blind you for a market structure. We're losing this demand right now, or we lost it already, and now we are going for this one. But the most important one is now is this low. And this low is pretty much, if I would still have a ETH long, this would be my major invalidation here. So I don't really care about the level two itself anymore. I care about the structure that formed right after the level. And obviously we can go down, we can sweep it, and we can still go up. This could be the reversal level, right? We don't need to go down to 2K. This could be it. But once we start closing daily candles below this low here, and it does not seem like a manipulation move and all that, it's probably heading down to the next key level. And then if my stop loss is somewhere down here because I played spot, I played wide, whatever, I might want to start reducing size here because it's simply not showing any signs of strength, rather more signs of weaknesses. So yeah, I think this answers it in general. But as said, every situation is a little bit unique. But I think these are good rules of thumb. Bivol chart and its implications. Yeah, I noted that we do that. Yeah, why not? We do that right now. It's quickly done. I also made a post about it, but I overcomplicated it a little bit back then. I mean, it's over 1.5 years ago, I think. It's way simpler. Basically, if you think about it, and also I have all my writings not anymore because I have a new TradingView account, blah blah blah. If you want to and if you want to see the post, it's somewhere in the study area, and there, I wrote down all the happenings, what happened, FTX, blah blah blah. You can see on this chart with all my writings that every time we hit supply here in 2021 and every time we hit demand, something important happens to the Bitcoin price, and it does not imply anything um, what price is up to. So if this is hitting demand, it does not mean price will go up or down for sure. It simply means something is about to change. So I always like to see this as more or less a program switch. We know about buy program, sell program. And for what I've seen, it seems like, or I'm quite sure of that by now, to be honest, every time we hit this upper area here, we shift from buy program into sell program or from sell program into buy program. And you simply know that by looking at the BTC price, and if it's going up for like a month, 2, 3, and it's hitting this, you know it's gonna most likely shift into like a downtrend, a sell program. And we had that, for example, in September. We topped on BTC while being in demand for BWAL. After like a few months of prices going up, we hit BWAL while being up here, so it was very likely that we're going to change into sell program. And it's more like, it's pretty much like a switch. And yeah, so the next time we're gonna hit that supply up here, and we're, for example, in a demand level, after being now maybe a few months or a few weeks into a downtrend, and we're going to hit this, most likely that we're going to switch the program again and head into a buy program. So you can use this as Confluence. And that's basically it. So it's really simple, plain simple. As said, I marked all key highs and lows out. I can also have a look into the study area real quick and give you the link. It's in macro knowledge, I think. Should be at least from a logical perspective. But it doesn't seem like it's there. Or I'm blind. Hmm. I will look on Nix. I have it in the list there. I can look it up. Okay, Victoria had a question about what about the price closing above the level in the wick? It wicked in the level and closed above below, and you did not enter. How would you enter? And would you enter at all? Yeah, we can use ETH for this example. So I mean the level was wider, but let's assume we had this most refined area. You remember that we marked out the FVGs there all the way down to the 1 minute. And in general, let's say this was our area. We entered the level, we closed above, and you did not enter. But this is a strong sign. So if the level is only wick, this is a strong sign. The level reacted already. If you look in order flow, for example, most likely lots of some trap shorts and lots of selling was going on into the level. And if you then want to enter, and if you have the expertise and the nerves and the emotional control, you can go to lower time frames here, and you can refine, or you can look for something where you want to enter. Maybe ETH is not the best example for this, but in this case, so for example, you could simply say, let's keep the 0.5. You could simply say, okay, it bounced quite aggressive. You don't want to chase it here. But because it was only wicked, if it's only wicked, it usually means price comes back to take liquidity one more time, at least, simply because orders can't get filled. So if you're a whale and you have millions and billions in orders to fill, you need time. And usually one wick is not enough. So price will most likely come back. And then you want to enter. On the way down, you can maybe sometimes refine it here in lower time frame. In this case, it's pretty tough to define where to enter, to be honest. But it perfectly reversed from the 786, but obviously you don't know that before. But once it goes below the 0.5 and you get some other confirmations, maybe you can enter here and put your stop below the lows. Sometimes it's more obvious. Sometimes you have a nice level here. Or you could even decide to enter a little bit higher to say, okay, you still trade more or less the same idea, but obviously it gets more risky. If you take the 12-hour here, it's not this idea anymore, but you still add into the same trend more or less. And this was like just, so for example, if you see something like this down here on the low time frames, this could be your confirmation to enter. I think I have an example on BTC, to be honest. Let's take a plain one, plain enough. There was a 23-hour or something, but the idea, I like the idea most because it was the 100K key level. Oh, where are we? There was something here, 14-hour and stuff like that. So if I go down then here, and you also see we have this big wick, and we have then the retest of this wick. And I traded this, by the way, live. So if you're interested, you can go for the Bitcoin thread, and you probably need to scroll up a good amount. But I traded this wide, so I had a wide invalidation. Actually, I opened, I think, 5 or 6 positions within this area here, and I momentum scalped into this. And as said, this is all in the thread if you're really interested. The full execution, everything. And I entered here on a wide one, covering the whole level. I entered here on a tight one, only covering the stop on 2 different positions. I TP'd, I think, 50% of the small position here because I expected this level to get taken again because we still left this FVG and the move happened real quick and we came back. The 50-minute thing was also very telling here. We came back, filled this FVG basically, and I wasn't quick enough, so this was happening really fast. So I entered here, had my stop below here, and I entered 2 or 3 momentum scalps here, and I I had a lot of BTC into this move. Let's frame it like that. And this was, as said, usually you have a retest of this level. In this case, it only went down to the 618 or something like that. But in this case, the FVG was your trigger point, and that's why I said the whole ETH example is pretty bad because this imbalance here, this imbalance screams, fill me, fill me, fill me. We have this higher time frame level. We move aggressively out of this area, and this imbalance wanna get filled, usually wanna get filled before a bigger move. And you see we almost filled it to perfection, and then we ripped higher. Beautiful trade idea. And if you missed the first one, or if you wanna add, this is a great example of how to do it. And instead of then covering the whole level, if the level once reacted, so my first invalidation was somewhere here. And then if I enter here, I don't put my stop loss down there. So I put my stop loss, or I put my stop loss maximum below this low, not down here. That's not necessary. That's why, I mean, once the level is hit, I look for local structure and trade a lot around the local structure rather than still looking for into the level. Yeah, and the main idea here was to lose 100K. So good example also for a psychological key level. We lose 100K, everybody screams, oh, it's bullish, bearish, it's so over, blah, blah. And then we rip out of here. So if I exit replay mode, I mean, it was beautiful to be in so many positions from here. really. Um, yeah, so key levels also work best combined with psychological levels and all those things. And you see quick retest of the level. Also here, this kind of auto block got taken, rip. So all you need is patience and a little bit of emotional control to not chase those moves, but rather let price come back once again. If it's a higher time frame level, it will do that more often than not. Okay, so let's go for Ben's questions. Mhm. Okay, I realized that whenever we have Fibonacci confluence, we're automatically in the right premium discount area because we will either below or above the 0.5, correct? At least relative to the local range. Yeah, that's correct. You don't, if you play like those smart money concepts, money tower concepts, you always end up below or in this case above the 0.5 on a bearish move on a short level, and it's always then in premium or discount. The only thing is you need to pull the fib right. Obviously, don't force your buys, and if you then wait for 0.5 to get taken, you're always at least at equilibrium or premium or discount. So the only thing left is to determine is where we are within the mid-range macro range. So how can we aggressive so we can know how aggressive to be with our position management. A strong TP1 or maybe skipping it all together if we believe we are at the major top or bottom. For example, perhaps entering with less size. Yeah, correct. The best trades are aligning with higher time frame structure. Depending on what your edge is or is going to be, if you aim for a higher win rate and for a fun edge to trade with very minimal time effort, always align yourself with higher time frame structure. Be patient. Obviously, if you're learning phase, in your learning phase, it makes sense to get more experience in your under your belt. It's just executing trades. Because if you only always wait for higher time frame levels, if they hit, you won't have the necessary skills, or it takes way longer to acquire them because you only can take a few setups per month or a quarter, whatever. Um, and obviously, this is maybe in the learning phase. You want to make it a little bit different, but in general, if you align yourself with higher time frame structure, in this case, always being aware that if you take longs here on BTC, you don't take longs after a 70% correction like down here. Every long you took down here was way more optimal than every long you took up here. This must be clear. Also if this level, the one I showed around 100k here, it might be a very nice reaction, everything, but it's definitely not as optimal as down here in deep discount. But obviously, if you want to wait for a deep discount, it might take a year or two for your level to hit. And yeah, the thing is, then we can compensate all of that with sizing. So once you have the proper experience, you want to size trades down there, or at least this is how I would do it, or how I will do it. Once we go down there into discount here, I'm gonna size my trades up more than I would do right now. My long trades. On the flip side, so once we lose the 0.5 here, or around the 0.5 also gets more optimal. Obviously, we are at the equilibrium. But once we break below this, it becomes more optimal. And this is, for example, why I sized my short up here so big, because it's in higher time frame, deep premium, even at all-time high after a 3-year bull run. So what else to say but you bet here. With the right knowledge, you might want to size a little bit more here. It's same like buying BTC down for 20k. You don't risk 1% on a 30% stop loss on a spot position. At least this is not how I would do it. I want to make money, and I live off of trading. So at some time, when everything is right, I need to be bold, and these positions reward me then for a very long time. Obviously, I still need to manage my risk. It could also go wrong, and then I want to be protected and don't want to pay all my money. So it's still a defined risk, but bigger at the right time. Yeah, and what you said, a strong TP1. So if it's in the mid range, if it's a so you should still have the same kind of rule set. So if you trade a mid time frame range, your TP1 should be according to this mid time frame range. You will get an eye for this it's also, for me, it's always a little bit an intuitive thing to look at this and say, so for example, if I take a BTC long here, my first, so this is, for example, I had, or let's take ETH, because ETH is actually in a level compared to BTC, it's just at demand. So if I look at this, my first, so let's imagine I'm still in this long here. I went long here, I covered, for example, this, whatever. My first logical target is the 0.5 of the swing. And I don't assume anything higher than that, but this, even though it may be a 2-day level or here this big demand or whatever, but it's still the 0.5 until proven otherwise. Because if we close above the 0.5, we might going to pull back, and then we go for the range high, and then it's the range high. So my next logical target is the range high. And if it's not the range high, if we break out from here, I can entertain higher targets, but I've already taken one or two or maybe even 3 TPs until this point, and it's not going to be on full size anymore. This is now, for example, we rejected from here. So this was also the first supply. So if I would still be in this trade, I'm not. For me, but this was always a hedge. So I just TP'd a little bit and then I chose AVAX, which was the wrong choice, but it is what it is. And then this supply right now also holds some truth and some strength. And you see it's this one. And altcoins or ETH is still pretty easy to trade or to read. The further down you go the altcoin rabbit hole, the harder structure gets and the harder it gets to read and the more confusing it will become. And so trading majors makes the most sense, and also trading other altcoins based on majors makes the most sense. So you want to structure all your altcoin trades around BTC, ETH, the dominance charts, the totals, because they are easier to read. And your altcoin is pretty much just an instrument or a proxy to those majors in the end. And in this case, this was the first supply. So it might be wise to at least remove the risk here. If you're still in a position and you hit this, my stop loss would be at least a break even. But still a logical target would be this. And that would definitely be my first TP1. And it may be between 30 and 50%. In this regard. But for example, if we have a, let's say, 1-year bull bear market, we grind way lower, we consolidate for a long time down here, or even taking this low, even going way lower. If we go for those prices here, I'm a little calmer. I'm not going to TP1 as quick. And if we go for mid time frame stuff, within here you take the 12-hour level. So it's 2-hour, so go for 12-hour level. If you took this trade, your first logical target should be this high. This is why I did not take this trade, because it's simply not what I want to trade. First of all, because I want to trade higher time frame stuff, maximize my time. What's the word? Efficiency. And so this would be a best case target for a trade like this, but your first target should be here, and even maybe this 0.5 for a first TP, because it's a mid time frame level. Yeah. So around the 0.5 could be your first TP, or at least stop loss at break even. Your first TP should definitely be here, and a good TP should also be here. So you have maybe TP 2 times, your stop loss is at break even, and it was a nice 3-4 idea here. Very nice to trade. You want to have a much more local target and want to be much more defensive with everything than buying something in. Even though it's higher time frame discount, we corrected significantly. We are below the 0.5. It's still not. It's still ETH. It's still an altcoin. BTC is hovering around 90K still. We haven't seen a real bear market. So if you take the 12-hour level, play it locally. If you take this level, you maybe want to be a little more bold and try to push the trade up here. And the reality with real swing trades, higher time frame swing trades, is that you're going to round trip a lot of them, because especially in altcoins, they pump a little bit, they don't go nowhere near your target. Then you have the option to cut it around break even or simply accept the risk. And yeah, so a lot of swing trades are ending on a round trip. But in the end, a round trip paying no stop for the potential to make like 3R or something is still a good deal, right? So yeah, sometimes it makes sense to take the trade and get out without any risk or without any losses. Um, but this is also, for me, it's all of those things are very intuitive. So to be honest, it helps me a lot to understand my own approach better by explaining it. But it will become second nature the more often you do it and the longer you do it. And in my view, the more flexible you are, if you so some people want to have this rule set, really like a checklist and everything, but this is, for example, not how I approach the market, because I think a rule set, or at least this is my way of thinking, is always blocking me a little bit, because oftentimes it's not perfect and it's a front run, slightly not touch, whatever, blah, and I want to be a little more flexible. But I've also seen that some people need those kind of rules because they're simply thinking differently than me, and that this is not about what's right or wrong, it's all about what works for you. But as I said, the 0.5 of a swing is usually the first good target, and then depending on context, if you took this trade, this 0.5 is a good target, even though it might not hit. But as said, a lot of swing trades will end in round trips. Okay, crystal clear. Let's have a look at Rooney extending the invalidation of levels QN. Not quite sure what you mean with QN. With this U chart right now, idea was to trade the 1 month hidden order block bounce with other confluences. The daily candles are bouncing within the level, holding onto the idea, and I will take the stop loss if it does hit. Stop loss covers monthly beyond liquidity. Yeah, and it's a perfect, reasonable trade idea. I mean, the monthly alone is not telling me too much, but I can chart SUI here if you want, and what I see. So you have the monthly. Was it a monthly? On the monthly, I don't see anything. You talk about the 2 month, I guess, but it doesn't really matter. So we take the zone, you took this trade, you covered the whole zone, so maybe even the FVG. So I would cover the FVG. And then you obviously need to look at local structure a little more. Then we can use this as our swing. We have the 0.5 up here. So the trade max target would be somewhere here, maybe. You said you covered only the monthly block. So this would be the best case. First logical area is this for a TP or for stop loss removal. And then also here, I will probably not wait for the 0.5 to be perfectly taken. Also because it's a little bit tricky, you could pull it from the highest one, but if you pull it from here, it aligns with this supply here. So I would probably be a little more defensive, because I know how altcoins tend to behave. And from a percentage perspective, it's a good trade. From our perspective, it's all right. Doesn't need to be a 5 to 10 hour all the time. And these are your targets. And then this is what I mean by altcoin structures always looking a bit odd, because it's always a little bit harder to define where you pull your fib. But let's take this as key high. So if you go for low time frames, it would probably makes more sense here. And this could also be a key high, and then we touch the 0.5. This is what I mean by altcoins. Yeah, it's oftentimes not that clear, and you can force your bias. In this case, now we know after that this was probably 0.5 to look for, but it's also a monthly level, so you probably would not want to play your trade like that. So a reasonable target is this, and this is what I mean by, should this now go down and fail, this is the reality of swing trading. Not every trade will work, and especially if you trade altcoins, they tend to do weird stuff. Yeah, so I prefer to trade altcoin majors, BTC ETH, and my experience with AVAX, the one I made, just showed me that it's not worth for a little high R or whatever. I just gonna keep on playing majors for that, and maybe spot still altcoins some at the right time. Makes sense to allocate some to spot, but in general, it's not worth the energy. And for maybe 1 or 2 or more, if even, I mean, If you take ETH here, it makes sense because it goes to this supply here. If you look at the SUI structure, as said, if you trade the monthly level, this is not a sexy trade. Nobody would TP here usually. You might want to remove your risk or something, but this is, yeah. And this is pretty much how my AVAX trade looked, because I took a higher time frame level. It did pretty much something like that. You obviously don't TP here. It doesn't make sense. And now I paid a stop because it undercut the low again. Yeah, altcoin stuff. Good. Back to the wish list. In this part of the video, mentioned that the last liquidity of the range makes sense to be swept, to be sweep the highs, because it's going to generate a lot of liquidity. When does it make more sense to give high probability to the last breaker blocks on the range? Wouldn't sweeping every high and low around a swing point always create even more manipulation? When does that stop being the case, and when can we actually trust the last BBs of the range? So in general, like a sweep of highs or lows is very powerful because it creates the impression of a breakout or a breakdown. So all breakout traders are going to run into this position, creating liquidity already. Many people seeing this low or high being taken or lost, going to buy or sell spot, because it's something structural. So I really like those kind of plays, and I really like them more and more and more the more I study them, because I neglect this swing failure pattern stuff for a pretty long time. But on a higher time frame, it's one of the most powerful setups, and it's very easy to define if it's going to break down or not, because if you have some execution tactics, if you have some order flow knowledge, you simply look at a little bit of lower time frame price action, and it's becoming very quick, very clear if this move is going to continue or not. While in a breaker block often leaves room for interpretation, like the close here and there and blah. Obviously, swing failure patterns are not always perfectly clean, but I like them more from an execution perspective. And also, it's always at the extreme of the swing of the range. It's a very high likely probability setup. The only downside to swing failure pattern setups is that you oftentimes don't 100% know where to put your stop loss. That's why execution tactics, that's why looking at a little bit of lower time frame to then use the local structure for protection and for execution. Because I don't leave limit orders for those kind of setups. That's why I miss like lots of those, because I don't want to leave that overnight, because I never know where to put my stop loss. If there's no structure anymore, especially at an all-time high, and there is no structure, it could simply blast through, right? It's not the most probable outcome, but it could. And so I want to execute it live. Maybe I'm also a little bit too cautious because I lack experience executing those swing failure patterns. Because I said I only started recently doing that. But what you said, the last BB of the range, I mean, it's in extreme premium or discount, and it all depends on the asset you trade. For example, in crypto in general, breaker blocks are a good edge. In stocks, I don't think so, to be honest. Everything I've seen in stocks, I don't I don't like breaker blocks at all. Some work, but the win rate is not that great, actually. Supply and demand works way better. And what usually happens at supply and demand, it's usually at the extremes. The supply and demand that I want to trade is usually at extremes or before crazy impulsive moves. And then if I get a sweep there and a swing failure pattern, like a close within the demand, then after the sweep, this is a great, great way to execute within this demand. But what you said makes more sense to trade. When makes it more sense to trade the break block, or when do we know? It's probably looking what happens when the level hits, or at least this is how I would approach it. Once price goes there, and if you watch the videos, you have probably seen that this is my usual approach, like always, basically. Not to try. I'm not trying to predict what price does before the level hits. I'm trying to react around the local structure when the level hits, because this is from my views, it makes the most sense. I mean, you need to be disciplined and emotional control, because usually it requires to drop to a little bit of lower time frames, and this can be very noisy there. But in general, I think, or I made the best experiences with doing that, even though it led to lots of early cuts or not being bold enough to enter, and I fumbled a lot of good setups because of that. But now it's a skill I have, and it required me to lose or to fumble some setups to learn this skill. But now I'm very happy that I have it. And as said, to me, from a logical perspective, it makes the most sense because I don't think that price is pre-programmed on the dollar because you have 6, 7, 10 different exchanges and they all have arbitrage bots between them, and then you have a bigger trader here and liquidations there. Price is usually not reversing on all exchanges at the same price. And so being too precise and thinking you can predict the perfect reversal beforehand, for me, I did not make good experience with that, but rather waiting for the level to come, executing, then looking at it, using the local structure for protection and for execution. Yeah, made the most sense to me. Might be people out there that do it differently. Whatever works, works. It's my approach. And so to finalize and answer your question is the last breaker block. If it's there, you might want to trade it. So best example, ETH 4-day. I remember taking the setup here, and I still marked it. I still have marked it out because it was one of my nicest my nicest trades, or my highest profitable trades, or best executed, whatever. So I have an emotional connection to this level. um, and we had the double top already here, and expecting here a sweep. Also, if you look at this, it makes also a bit sense to. You see, we have this breakdown here, so we close the daily below this swing. You don't expect another sweep of those highs. If you fail to enter here at this double top, which is technically a swing failure pattern up here, and at the time I did not look at swing failure patterns because I thought breaker blocks are the only thing one can trade. And here we have the swing failure pattern. You don't enter here. You have the breakdown. You get your retest. You don't expect another sweep of those highs. This is pretty much the last liquidity, the last breaker block, and it worked to perfection. And so every situation is unique. But in this case, if you see something like that, I would definitely use the breaker block for entry. Definitely. I mean, it doesn't get any cleaner than that. But if you look also for the daily, for example, and this is what the market likes doing as well, we have a daily one forming here. We went lower. We did not close below this low. Technically, we did not break structure, so the level failed. But it looks like, so, oh, breaker blocks are shit. Well, if you're not secure in your strategy, this might lead to you saying, okay, I don't want to take this because the one before failed as well. But in reality, we never closed below here on the daily, and we closed several daily candles below here. We also closed the 4-day below this area here, and also below this wick. So we broke structure, and then the retest gets valid. This is the setup you want to look for, and it's an extreme premium. It's at this supply. We have already this double top with the wicks. We have this supply. We're touching it here. We break down. We form this breaker block. This is a plus setup. Doesn't come around every week, but this is, for example, a breaker block you want to size. Good. In a previous stream, you said, if I only have 1 hour into the 0.5 of the local range, I won't take partial profits because this leads to bad statistics. I would just move the stop loss to break even. From how many hours available up to 0.5 of the local range do you start taking profits? I don't like nail it down to the R, but you remember what I explained about the SUI setup? That it won't make any sense to take this here, to take a profit here. If you trade the monthly, you cover the monthly on a 24% stop loss, you don't TP here usually. But if you want to remove the risk, so for example, you took 3 trades, or you don't have confidence in the level anymore, or whatever it is, you might simply want to move your stop loss to break even, remove the risk. You can always re-enter. Sometimes it's also nice to be out of the position again, reevaluate, without an emotional attachment or bias, and then re-enter, or even avoid a loss. But taking a profit here does not make any sense for a setup like this. This is pretty much what I mean. And then I TP on structure. It's not that important that the statistic says I TP at 1.6, but if you take many setups like that on 1 hour and your win rate is below 50%, you will never be profitable. That's what I mean by that. And structural wise, up here at the 3R would be the dream, but here's also a right to take a profit or at least remove the risk already. And it's again something that's very unique to each level. And even though here now it makes a lot of sense, the next time something similar comes up, um, it might look completely different, but it's pretty much the same thing. I didn't trade the level because there was no time frame, but at least I wanted to see how some of the concepts we've been covering in previous streams played out. Any annotations? Oh, a new word. Are the annotations accurate? Right. English lesson for me here. So you have the 25 minutes, and I had a look at this before. You have this big wick at the top. You have a smaller body. You have higher than average volume, and this candle has also higher volume and average. So this is higher effort, lower result, big wick at the top. This is textbook absorption. This could be your entry trigger, yes. And you could wait for the candle close to avoid this big wick stopping you out. Yeah, beauty of execution tactic. So yeah, you got that right. Your annotation was accurate. Okay, so that's yeah, you're welcome. That's the questions. If there are more, we can obviously go over them. If not, we can then look at Victoria's setups. After the trading view picture, yeah, on Velo, I skipped that. Longs opening into a supply level good. Yeah, you have absorption, you have longs opening. This would be a dream A plus lower time frame idea. A plus confirmation for your lower time frame idea. You're welcome. Okay, if there are no more questions, are you up for what we talked about last time, Victoria? You wanna still wanna do that? If not, that's also not a problem, obviously. Okay.
Hey, do you hear me?
Yes. Hello.
Okay, good. I also wanted to show some trades that I skipped due to emotions. Maybe you had some advices for this ones as well. So let me share my screen.
Yeah, sure.
To be honest, the price section right now is quite messy. I know it. But still, I wanted to trade Ethereum. So um, I know you like you teach us the market structure, right? And all. So, and I, I really appreciate it. But I think this market structure was kind of not understandable for me. So I found few levels. Let me go here. Maybe I'm sorry, is it it's so messy. Let me okay, let me maybe clean it up. So I wanted to trade this one, this one here. So it's actually it's basically a local structure, right? And one day we can see it better. This one, right? So I found this level before, and let me try to wait. let me try to play it. So and I was thinking, since there was like kind of breakout structure, right? And the bullish how do you call it, market structure, right? I still wanted to short this level for some reason since it was like in the premium, right? And multi-time frame level. And I was looking, I'm always looking Ethereum with BTC together. So, but the BTC, this was maybe one of my biggest confluences, did the SVP. Maybe I can see. So I was looking at this one, right? And it did it an SVP, right? This was my main confluence to short. And I didn't knew at the time, but it was also confirmed as redrive pattern, right? So
Mhm.
I was like, okay, this is a good level. But the issue is with the execution. So I had this level, right? And I entered it. Let me maybe show it this way. So I saw the pump, right? And I'm like, okay, the pump is done. Liquidity is taken, right? And then we can go because we did the SVP in the BTC, and then 8 hours it was like also like a double top, right? So like it's done. Okay. So and the issue is, right, I entered here, it was on 1 minute. And the thing is, so I covered a lot of, I say a lot of like stop loss maybe, because my idea was that I had the seven, so it was a multi-time frame, right? Like 12 hours, 10 hours, 5 hours, etc., etc. And on 7 hours, the candle closed inside after this pump, right? So I'm like, okay, the candle closed inside that I can enter. So I entered, and I didn't like my stop loss, to be honest. So, and I was watching the price at 1 minute, and I wanted to move my stop loss here. So because my execution was lacking, like here was a FVG, like small FVGs, right? And on 1 hour there was like also a small FVG as well. Wait, where am I? I'm sorry for explaining. Maybe
No, no, it's
bad.
good. It's good.
Okay, okay. So this is the FVG, right? And I covered it, but to be honest, ideally I would like something like this, right? So if I would invalidate it, right, it's gonna be like I wouldn't pay unnecessary money. So I wanted to ask your opinion, since in 1 minute I saw the price was kind of consolidating. Should I have moved my stop loss to like based on 1 minute ideas like this consolidation because it's kind of was respecting right this highs,
So you,
or was it good? And
Mhm.
yeah, go ahead.
If you're done, I don't want to interrupt you.
Yeah, yeah. Or was it like, or was it a good idea to cover the small one? Or maybe I needed to cover 7 hours a week, you know? I'm not sure because, so this was my main question about the stop loss. I'm not sure why I'm always getting up below, like here. Should I put it here? The stop loss issue is kind of, yeah. I'm interested in it.
Mhm.
Yeah, I'm done.
Okay. So several things. First of all, you waited for the close to enter. Makes perfect sense. If you then execute on the 1 minute, you can do that definitely. So I'm not saying this is wrong or anything, but you need to know that the likelihood or the probabilities of your stop getting hit are way higher if you execute on such tight stop losses on the 1 minute structure. You need to,
Mhm.
if you execute on the 1 minute structure, you should also not risk the same amount as if you trade the mid time frame level. So you should then see it as a scalp, and you should also think about,
Mhm.
okay, what is the advantage of me really entering at this 1 minute on very tight invalidation? And you also said not paying unnecessary money. You would even want to play tighter. But the reality is, you don't risk more or less money. Your risk should be defined according to the context you take this trade in. And this might be like $10 or whatever, or 100, doesn't really matter. Even though I would say on the 1 minute, it should be way lower than on the 7 hour. And then if you execute on the 1 hour, 1 minute, it's the biggest advantage is that you can play it on higher R. So you can play the setup tighter, you get higher
Mhm.
R, you can play on higher leverage, you need less margin, but you also need to be aware that you get stopped more likely. And this means you maybe want to execute this trade 2 or 3 times to get in. You then have a higher R, and if it then
Mhm.
from a statistical perspective still makes sense to try to play it that tight, you can do that. But you should at least cover the FVG you covered. If you trade it as
Mhm.
1 minute idea, I would ideally even wait for the FVG to be taken and cover then the supply above the FVG still if I want to execute on the 1 minute. So if you forget, go please on the 1 minute again, and let's look at your execution.
Maybe put it here. Yeah, it was based on 1 minute breaker block.
Ah, yeah,
Um,
you waited for this FVG to be taken. But if you zoom out a little more,
yes,
please. So even though your idea is okay, but if you draw a fib from the recent high from the yeah
this
from
one
no from the upper
or
one,
this one?
no from the highest one,
Oh, this one.
yeah, to the slope,
This one.
you want to execute in premium still, right? And so you should have waited for, in my view, for this upper
Mm.
FVG from a technical perspective. You can obviously enter earlier and you
Oh,
can
okay.
scale your average in, but this FVG should at least be covered. And I would, for example, execute above the 0.5, meaning in this
Hmm.
FVG, and I would still then cover the whole supply. So if you move your trade box up to the 0.5, like for example,
Hmm.
or make a new one, doesn't matter.
Yeah, like here. Okay, I can move it like this,
Yes,
right? Like this.
and then you stop loss a bit higher. Yeah, like that, or even
Like here.
covering this upper high. This is how I would execute this idea still. And if you want to play it
Hmm.
tighter, you could then play it on the first area where you had it. And
Okay.
this is how I would execute on the 1 minute in this case. But you still need to be aware, executing on the 1 minute. The 1 minute is I don't want to say random, but it's very erratic, and it's you can never know if this high gets taken again or not, because higher time frame price action is defining everything, and lower time frame price action is like
Hmm.
way below that. So your probabilities decrease with going on those lower time frames. And then the question is, what is your context? Are you still executing the mid time frame level, or are you scalping the 1 minute
Yeah,
here?
so no. I was executing the middle time frame. My 1 minute entry was based like so I can enter on a better RR, like uh idea based on middle time frame, but I enter on 1 minute, so I have a better entry like
Mhm.
this.
Then if you still trade the higher time frame idea, you should then also put your stop loss behind this or mid time frame resistance. So you should at least cover the level. And in this case, so for example, I would put the stop
Hmm.
loss where you have it right now. So you wait for this pullback on the one
Okay.
minute to not chase it, but you let it come back.
Hmm.
You put your stop loss still where you put it on the 7 hour idea. And this should, if you go back to the
Hmm.
7 hour, please, this should then at least cover the FVG.
Hmm.
Where, okay, there are
Yes,
many,
yes.
many wicks. So,
Yeah, there there's a lot. It
so
wasn't an app optimal setup. I understood it later. But yeah.
I mean,
I
it's a
still
valid,
tried to play it.
yeah, and it's a valid mid time frame setup. So why not take it? Why not gain experience? I would give your stop loss more room. I remember when we looked at another setup of yours, you tend to play them very tight, and this seems to be a little bit like RR greed.
Yes.
And also what you said about like to pay less money, your money amount should always be defined fixed. So you pay $10 for this stop loss, and
Mhm.
you pay, for example, also $10 for this tight stop loss. Doesn't really matter. The money amount doesn't change, but you can get more R out of it. And don't be too greedy with that. Rather give your trade a little more room than too less room. In this case, we know that price action simply went higher after and taking this out again and
Mhm.
then moving lower, so it was tricky to trade anyway.
Yes.
But in general, I would give the stop loss more room.
Okay. Thank you. Thank you. And I wanted to show you a few more trades that I didn't take, and maybe you can help me with my emotions, like maybe have some advices. So it was actually three trades this 2 days. One was for Caspa. Um, Let me show you. I'm sorry, I have a little bit messy right now. Um,
It's totally fine.
Charts because I want to journal everything. So this was the level, right? And there was like a huge FVG like this one. You see, there was a huge move, and I charted maybe this levels like quite some time ago. So,
Mhm.
but this level I was monitoring it, and in the end I didn't take it. In the end I didn't take it. So basically, why? First of all, when the price moved from this level, I wanted to take this level. My perfectionism was like, okay, the price will come back, SVP this, and then it's gonna go back like in the expected direction. And like, okay, if I enter like now, like it was entry based somewhere here, right? So I'm like, okay, it's not the perfect, place to enter. So, but still, if I enter here, it would be like at least 3R, right? So
Mm.
it's not that bad. And also, I was affected by someone else's opinion, and so he did a market analysis. It's an experienced trader. I think you know him, and he told, okay, the market analysis tell me, the stars tell me that the price will likely go like even lower because of the BTC going to take some demand. So I'm like, okay, I'm not going to take it. So this is my first trade out of three, right? Um, the second one was on gun. I like to actually check some shit coins. And so this one was pure greed, to be honest, because I wanted to enter this level some time ago and it would bring to 32 RR, right? But I didn't enter because of the volume was quite low. So I'm like, okay, I didn't enter this level. And then I saw this one. And when I saw this one, the price was like kind of here, I believe. And I'm like, okay, the price, okay, gonna go higher to SVP is high and then go lower. And it's again the perfectionism that, okay, I want like 1 minute breaker block. I was like refining, you know. Oh, wait, it's 1 hour. 1 minute, it's just like crazy. You can see that the bot is trading the asset. So yeah, that's weird. Yeah. So I refined few breakup blocks, but it never got like this one got hit, but it's not like you know like a usual price action. So and I also was pulling fips, and the price were never like never reacting.
If just
So
this one thing, if the chart looks like this on the 1 minute, don't trade the 1 minute.
okay, that's a
Really.
good advice to be honest. Yeah, so I didn't trade it at all, so yeah, but I entered the paper trade like here. It's not the best one, but I just wanted to enter it just to against my feelings. So just paper trade, and then there was one more which I didn't actually take, but it was really good level. The volume was there, so um yeah, I just didn't take it because again, so we see the SVP right here.
Mm.
And I always go to 1 minute to have like the better one, right? The better entry idea. And here I saw how it reacted. And again, I expected from market something. And probably this is my issue to expect that the price will return and then like sweep the low and go back to the high again, right? And I see the reaction and I'm like, okay, I need to enter. And I could enter somewhere here, but I didn't do this because of the perfectionism again, because I saw, okay, it's not the perfect entry and the price will come back. So it's kind of like a hopium or something, you know. And maybe you have some advices how I can deal with it.
So if you let this chart on the 1 minute, so first of all, you don't need to execute all trades on the 1 minute. If you need to be honest. If it's not leading to better results, rule it out.
Mhm.
It's always like you need to be completely honest. And if something is not leading to better results, I would just not do it. But in this case, if you pull up the 1 minute again, and I'm not going to tell you don't use the 1 minute, because obviously if you master the 1 minute, there is like lots of value to it. In this case, a very simple thing you could do to like the thing is, it seems like you hesitate to enter, even though
Mhm.
everything is like you need to have a certain framework, and if everything is according to your framework, there shouldn't be nothing why you shouldn't enter. In this case, the
Mhm.
hesitation, in my view, comes from you looking at the 1 minute and not being 100% sure
Mhm.
about what you see, and this leads then to hesitation. But for example, if you have this the steep drop into the lows, if you pull a trend line from the highs, and once the trend line is broken here, no,
Oh,
a trend line,
trend line. Sorry.
yeah.
Yeah. From the highs here,
Mhm.
like this.
Yeah, and simple as that. Once it's broken, you have confirmation that at least the momentum is changing. It's not meaning that the level will work for
Mhm.
sure, but you have everything lining up. You have premium discount, you have a level, you have all your typical analysis, and then you want to execute it in the 1 minute as it seems. So pull such a trend line, and as long as price is below this trend line, there's no reason for you to enter according to this execution
Mhm.
tactic. Obviously, you can use different things, but in this case, you wait for this break, you enter, you still get a better R until than if you wait for a break of the 0.5 or of structure, because then it's, I mean,
Mhm.
the asset seems to be very volatile. Um, then your stop loss gets kind of wide. With this trend line, you might be able to catch it a little bit earlier, and it might help you to get a little more confident in your execution, because what you're looking for, as it seems on the 1 minute here, is a confirmation that you want to enter the trade, but it seems like you still lack a little bit of experience or the proper techniques to define then that this is your confirmation to say, okay, yes, I want to enter here.
Mhm.
And this comes with experience or by trying different things. So for example, you could use the trend line. You could also look at very local structure, even though this is not the right approach in this one, to say, okay, it's starting making higher highs. But
Mhm.
in general, I mean, this is I don't even know this asset. In general, if you have very good higher time frame levels on major assets, don't fumble them because of the 1 minute, and simply enter
Okay.
them. The level hits, you enter, you put your stop loss below technical resistance. So can you show me the level on higher time frame again, please?
Mm. Yeah. This one.
Okay, so in this one is actually a weird looking chart, to
Not
be
that
honest.
optimal because because of the APG.
Yeah, so you could, if you want to enter in the level, you should then cover the FVG from a like
Mhm.
technical perspective, but then the RR is obviously not that great into this high.
Mhm.
And for this, you can then use the execution tactic. So the execution tactic should be nothing but you bettering your R by not being greedy. I mean, this is anyway, I wouldn't recommend to trade such things, but if you want to, you need to gain experience of what works best on those. You know what I mean?
Mhm. Okay. Yes. Yes.
And I think looking at this at this specific level, I'm not saying this is going to be a good thing every time on this asset, but looking at this specific level
That's true.
with the trend line, it might be already something. And another big thing of this hesitation is experience, and you can collect experience by simply, for example, you know Mark Douglas and the seminars,
Mhm.
and he, for example,
Yeah.
recommends to take 20 trades
Like when
where
it
you
trades. Mhm.
where you don't manage the position. You have your stop loss. You don't you it's either TP1 or stop loss, and you execute 20 trades based on your system. Execute. Low size. Just doing it. This will give you confidence in executing.
Okay. Thank you so much. Yeah, I will journal it. Thank you. Thank you, Nti. I don't have anything else to share, to be honest.
Okay, and we can also look at Casper. again because you had the same issue. Maybe we can also figure something there out.
Okay. Let me see.
Because what you
Okay.
said was you said you wanted to enter, but then you heard another opinion of a trader, and then you said like, oh no, I don't want
Yeah.
to enter this anymore. This is also
Yeah.
important. If you trade you if you have your own idea, it's your idea. It doesn't really matter what anybody says. It could be the best trader in the world. First of all, it's not it's sometimes somebody is bearish on a certain time frame or on a specific asset, but this does not mean your 3R trade idea could not play out here. This is very important. I
Hmm.
remember from my early stages, I was also like having ideas and then like want to enter this. And because I was not 100% confident in my abilities, I then looked for somebody else's opinion. And this guy, for example, was then bearish, and I want to be long. And then I thought like, oh fuck, oh no, I can't enter. But the context is very different. So for example, you trade a 4-hour idea here on a 3R. This bounce could definitely be happen while prices are going lower next week, for example. And you have this bounce, and now prices are going down. This has nothing to do with your idea, and so be careful what you let in to your mind. So I mean,
Hmm.
this asset could be the best trader in the world, but he or she is not trading your idea. And you trade your idea, you don't listen to anybody else, you execute your thing, and simply accepting the risk. You enter, you accept the risk. That's why you manage your risk. That's why we risk only 1 or 2%. And while it's painful to take a stop, it should not be painful from a monetary perspective. And for this reason, you
Hmm.
can simply like take the loss and learn from this idea. I mean, you learn now as well, but next time you should simply execute. Doesn't matter what anybody else says.
I agree with you. It actually happened second time to me. So yeah, probably I will just stick to my plan and that's it. At least I will learn, right?
Yeah, and it's nothing lost. In the end, you gained experience, you did not lose anything. It's a win. If you don't lose money and you learn something, it's a win. If you lose little money and learn something, it's also a win. And so in your early stages, if you manage your risk correctly and if you just keep on playing, everything is basically a win. The win is keep on playing, risk as little as you can, and anything else is comes with experience. It's yeah.
Okay, thank you, Nancy. Maybe somebody wants to join the stage.
Yes, we can do that. We only have 8 minutes left, so we actually can't do that. Sorry for that, but I have to call my parents today after the session. But what could we do for the last 10 minutes? Yeah, no problem, Mr. PA. Was nice to have you. Yeah, and you also said we have higher highs here, and this is true, but taking a short here on those higher highs makes still perfect sense because if you zoom a little more out, the higher time frame context now is down. So we have higher time frame market structure
Yeah.
going down, and taking a short here is actually a good thing. Even though it's below the 0.5 already, it's still like a good thing. Even though also if you have a long, hedge your short here. And if you look, for example, how I marked the level out, how I pulled this fib, how I marked the level out, it pretty much reversed perfectly at this fib and this supply. This is, for example, this breaker block and maybe on 10 different time frames. This is not something I want to trade simply because this supply is right above and I might gonna get front run and I might not take any setups here. But I would not want to trade this breaker block based on this here. But it's still a valid setup.
Nancy, we
So,
didn't see your screen.
ah,
Oh, you want to show your screen, right? Or no? Or you were explaining about mine.
no, I wanted to show mine actually. So thanks for telling me. Maybe a quick look on exo charts. I think it takes too long to load and to get the hang of it because I've not looked today and they usually need a few minutes to groove me in. But we can do that next time again. So we have those high highs, but obviously we always have an uptrend into because we trade a reversal edge. So we want to catch the reversal. So we always have this uptrend and then nuking from there. And it's an uptrend until we nuke, right? So at some point we need to try to get in. And I would, for example, look at the supply and refine maybe within the supply. I would not trade the breaker block. I might miss the setup, but in the end, then also nothing is lost. But that's why I oftentimes only mark supply and demand, and I would want to trade this maybe this, and maybe up here, and anything in between is not so interesting for me. Because looking at this, your setup was in premium, but the further up we go, the better the probabilities. And it's the 786 up here in the supply looks very juicy. Um, but as I said, your setup is totally valid. Your analysis was correct. We had several time frames here. Makes perfect sense. And even though this is an uptrend, we are in higher time frame downtrend. So still a good setup. Okay. Yeah, crypto is not showing a lot of strength right now. And these three drives, what is STT up to? And also because somebody asked about invalidations of levels. Um, yeah, Rooney, invalidation of levels. So for example, should the USTD level break here go higher, your ID on SUI is also pretty much invalidated. Even though your price maybe not even at your stop loss, but should we start making high highs here, breaking out of this key area, the idea becomes less likely and or less likely to work. So you could self yourself a full stop loss, maybe, but you could also then like it could still be a double top or whatever. But it's always about shifting probabilities percentage wise. So you have several things you look at, and the more things that line up, the better. So you have, for example, this breaking structure to the upside. You have maybe Bitcoin breaking structure to the downside. Then you have a pretty clear sign that you should get out of SUI. Um, and the more you can add up, the better. But from a technical perspective on SUI alone, it's this. But as said, if structure breaks here already, why would you wait not a 24% drop to invalidate your idea? Because structurally speaking, if USDTD is breaking this, we probably teleport up to the supply, and this probably means one level lower for most coins, which would be ETH probably then down here, and BTC at the 72K level. And from there, we will then obviously see what's happening next. And so majors are going to be your validation and invalidation for altcoins. And to be honest, I have this topic a lot because people like to trade altcoins, and it's totally fine. But you need to trade them on major structure. So this is the structure you want to look at. This is the structure you want to look at. And if then there is an advantage to take SUI because whatever reason, because the RR is better or whatever, then it makes sense to trade SUI. But I would still invalidate or validate the setup based on those majors. Exactly. USDT, also USDC. Many things to be taken into account, but those dominance charts are very important. Supply and demand is the boss. I was too focused on breaker blocks, to be honest. As said, breaker blocks are still a great edge in crypto, but and there's also I think I skipped through some timeframes and I've seen so here for example is the 6 hour, and up in this supply, this little level here becomes very valuable. down here with this level above, so price has still a reason to take this, right? We have a breakup block here. So you take this level, but there are still levels above you, meaning price has a reason to go a little bit higher. So you can either enter here and scale in and have your stop loss above here. So this is also a nice approach. So you enter at this level, you enter here, and then you cover the next level and this fib and the 705 that we drew. Pull it again. So this is how, for example, I would structure this idea. And then if you enter here, and if you see this level is still there and price goes there, you maybe want to execute here again, and then your average is somewhere between those two, and then you're at 1% risk or 2%, and then see what this would be. Now I have word difficulties. What this could be, no, how beautiful this trade could be, simply by that. And you don't need the 1 minute for that. The 1 minute adds lots of noise. Your setup basically on this time frame, your setup looks basically like that. And if you don't scalp the 1 minute, this is not a very probable setup. It leads, if you play so tight, it leads to lots of stop losses. They can work and you can recover them very quick, but you need to execute more trades, take more stop losses, stomach more emotional pain, more or less, for those losses. If you can handle that, obviously, nice way to execute, because this can improve your R by a lot if you know what you're doing. But in general, executing at this level to be exposed, scaling in a little bit further, bettering your average, covering this area, being in the supply to 0.5 here, the 786, 2 technical, 3 technical resistances, covering all the liquidity areas here, and then targeting the range lows. I mean, would be a 7R idea. You would probably TP somewhere here, and it would end to be a 5R trade. Way less stress, way less time consuming than looking at the 1 minute. Yeah, and the 20 trades idea, still amazing stuff. Don't it will remove the thinking aspect. It will remove the hesitation. It will remove the cutting early, this and that. It will simply make sure that you just execute based on those rules, and it will eliminate, or it will take the emotional game out of the equation. Um, and that's very valuable, because then you really see what the edge is worth. It's also with backtesting. If you remove the emotional thing from the equation, you will see with backtesting if the edge is really that good, or if you really understand that edge on that level. Because if other people report a 50% win rate and you on a 30% win rate, it might be that you have some errors in your execution, and you can only check that by removing the emotional part from the equation, because obviously these are also mistakes that fuck up the system. But if the technical aspect is still lacking, the emotional part just adds noise, and it's hard to filter out what's the real problem, what the real problem is. TP your stop loss, no managing. Yeah. Also best not a lot of execution tactics. You have a level, breakup block, supply, whatever. You enter, you let it run. TP1, TP2. After TP1, you can move your stop loss to break even, obviously. How do you scout for stocks to chart? I assume you're starting with 0 stock trades till now. Fundamental understanding, broad structure. We had a live stream talking about this. If you go for the recordings, I go real quick. Stock charting in my approach. I don't know if you've been around for this one. I'm gonna send it into the group and to the chat. Why is it not sending it? Copy the link. Before proper charting, I mean, it's the obvious ones. So, for example, I have this NVIDIA short running. I look for Google stuff. The obvious one, Magnificent 7, they have a lot of volatility, and they're kind of predictable to some degree. And then other than that, it's me looking for narratives. It's me being interested in stuff. Um, and this is, for example, so I have several sources. So I watch a lot of YouTube videos. I have investors and stuff like that, which I listen to, and those people have then some narratives, and I look up for companies, or they have companies and I apply my TA, or I have narratives myself. So for example, I'm interested in something, I look for companies. Usually I ask gpt and say, hey, list me the top 10 companies from a market cap perspective and profitability perspective, and tell me what kind of product they're offering and service and blah. And then I look for the ticker, and then I simply apply my TA and look for stuff I like. And by now I have this big, huge watch list. Sometimes I add new stuff, but in general, it's my watch list, and I trade through that. And sometimes I look for a new narrative. Um, but yeah, but usually I find it through narratives. And it's for me the most logical approach to look into a sector and to think about if this is something valuable for the future and what companies are in this sector. Yeah, and a certain amount of volume. They should have a certain amount of volume. So there are stocks, one in particular, not this one. Um, where is it? It's a very weird one. Yeah, here. First of all, it has no data since 28th of November. So they just don't update the chart anymore. And I don't ask me why. And I mean, it's a full play play, so I do not expect anything from that, to be honest. But it's a nice narrative, it's a nice idea, and yeah, I allocated 0.001. And if you look at the chart, it basically looks like the 1 minute chart of this shitcoin Victoria showed us. So this is definitely not something you want to trade on an occasional basis. And it's also on six. It has 600K in average dollar volume, which is as much as the market capitalization, and it smells not just a little bit fishy, to be honest. And you want to have a certain amount of volume, so make it 30 million, 50 million, 60 million. Then this chart gets predictable. Then there's really like trading going on, volume, liquidity is important to make it predictable, because otherwise they just chop around like a shitcoin in 1 minute that has no volume. And just be aware that if you look at the average volume here, it's in shares. So you need to calculate the dollar value yourself with price. Explain your recent posts on X-Rip records in more depth. Yeah, we're gonna do that on Saturday. I actually have to call my mom now. We're already in overtime because they go for holiday tomorrow, and I told her I call her today. And so I'm gonna do that, but we're gonna dive into the whole yield stuff next week, if you wish. Um, as little Eskov here is very happy about that already. Um, so yeah, let's talk about this stuff. I'm diving myself first really into this. I mean, I have a good understanding of liquidity itself, but of the bond yields and stuff like that, it's um, it's something different, and it's pretty much showing why, like, it's the machinery behind the whole system, more or less, and behind the whole banking system and the economy and blah. So it's kind of interesting, and I need some time to dive into this, to be honest. So I've created this chart today. Yeah, you have seen the post. You have seen the post. I have to pull up several windows for that. Now we do that next week. We do that next week. Talking about bonds a little bit, talking about deals. So thank you guys for joining in. Thank you, Victoria, for sharing today. You're doing a great job, by the way. So keep it up. And other than that, I wish everybody a great week. We talk on Saturday. And oops. And bye bye, guys. I can't hang up. Bye bye.